Juandre, guys, is one of those masterpieces that I've created, and every time that I look at this question, I'm actually quite proud of myself. If you understand Juandre, you really do understand what you're busy with. So let's do Juandre. Let's going to do it bit by bit, piece by piece, so that we can really see what this is all about. They are a registered VAT vendor. We have to work with 14% and imports a wide range of cosmetic products from the United Kingdom. It has two warehouses, one situated in Cape Town and the other in Johannesburg, from where distribution and sales are taking place to various independent retailer outlets across the country. Juandre deals only with VAT vendors unless otherwise indicated. The financial year end is 29 February 2016 and the company accounts for inventory on the perpetual basis. Important. An extract of the pre-adjustment trial balance as at 29 February 2016 has been prepared and presented to you by the bookkeeper. Now let's quickly squiz through the trial balance and then we'll see what they want from us. Capital, furniture and equipment at cost, accumulated depreciation, long-term loan Absa Bank, trade debtors, allowance for credit losses, 1 March 2015, beginning of the year. VAT control account, which is the credit balance, trade creditors, allowance for settlement discount debtors. Oopsie, look at that one. 1 March 2015, we are already at 29 February 2016. So immediately you should ask yourself, what on earth does this 12936 still do in the books? Bank overdraft, accrued interest as at 1 March 2015, beginning of the year. We should have gotten rid of that accrued interest right in the beginning of the year. We should have written it down to our interest expense. Prepaid rent as at the beginning of the year, 15,000 Rand. That shouldn't have been there either. Inventory count value as at 28 February 2016. This trial balance 29 February 2016, so it was leap year. 28 February 2016, that was when we did the actual physical stock count. Then we have sales and cost of sales. We had a perpetual inventory system, so therefore cost of sales, advertising expenses, salaries, rent expense, stationery, selling and distribution costs, depreciation, and we have a very ugly thing here, discounts allowed, and a very ugly figure there, 132,417 Rand. Now before we start with all the information and the adjustment entries that we have to pass, let's just find out what is required from us. Based on the given information, prepare the statement of profit or loss and other comprehensive income for the year ended 29 February 2016. And then the B part, present and disclose. Now, as soon as you see the word disclose, it means I need to show the face of the statement of financial position as well as the notes on current assets and current liabilities. They don't spoon feed you. They don't say, I want trade receivables, I want trade and other payables, I want inventory. They say all current assets and all current liabilities applicable notes. You have to disclose to the statement of financial position as of 29 February 2016. Guys, look at the mark allocation of this question, 36 marks. So this question will keep you busy for quite some time, but you will also have to know exactly what you're doing in order to complete the question in the time limit allocated to this question. Great stuff. Now let's start at the beginning. Inventory and sales. It is the policy of the company to add 25% profit margin to the cost price of goods in order to determine the selling price. So my formula will look like that. A settlement discount of 2% is offered on credit sales that are settled within 30 days after the invoice date. Included in the total sales for the year, reflected on the trial balance. Now let's see what we're talking about. We have total sales here of 8.7 million Rand. Were cash sales that have been correctly recorded with an invoice price of 570,000 Rand. Guys, invoice price means that will include VAT. So the 8.7 million Rand does not include VAT, but that certainly does include VAT. So if I take out the VAT on that amount, it gives me a total of 500,000 Rand. The sales figure was before any settlement discounts have been taken into account. What is our policy? Our policy is to grant a 2% settlement discount if somebody is going to pay within 30 days. So that discounts allowed account becomes a little bit more, makes more sense. 75% of credit sales qualified for the settlement discount during the year. The accountant was not aware that the allowance for settlement discount account should be adjusted with every debtors transaction that might qualify for the discount. So what did the accountant do? He forgot about the opening balance of 12,936, so that he didn't take out of the books. Furthermore, when settlement took place of a debtors account and the debtor was able to make use of the settlement discount, he debited the bank with the amount received, he credited the debtors account with the amount received. Then in order to clean out the debtors account, he credited the debtors account with a VAT exclusive amount of the discount allowed of 132,417 then in total for the year, and he would have debited VAT input with a VAT associated with that. So that discounts allowed account, that would have been the VAT exclusive amount of the discounts that they have actually granted this year. Now, in this question, it's not as easy as just to take the discount allowed and just to write it off against the sales and say, whoopie-doo, there's our final sales. We actually have to do a little bit more work surrounding that discount. You can accept that all debtors who were expected to make use of the discount at 28 February 2015, in other words, at the beginning of the year, in other words, that 12,936, that one there, all of them actually utilized the discount, and the correct amounts of discount granted during the year were taken to this discount allowed expense account. So there were no mistakes. The only mistake is that he posted it against the discount allowed expense account. You may assume that all outstanding debtors on 29 February 2016 still qualify for a settlement discount. So now, this is very fancy words to tell you you have to get rid of a few things. The first thing that you have to get rid of is the 132,417. The second thing that you have to get rid of is the 12,936. The third thing that you should do is you should update your allowance for settlement discount account to reflect the closing balance as at year end. Now, let's just do one in totality and then I'm going to jump to 4. On 28 February 2016, the following transactions took place which have not yet been recorded. An order and payment for merchandise with a selling price of 45,600 Rand VAT included were received on 28 February 2016. It was delivered to Chris-Chem Pharmacies on 2 March 2016. So when did we perform under the contract? Only on the 2nd of March 2016, which is in the new financial year. So that means that that amount that we have received equals income received in advance. So we would have debited that because we have received the order and the payment. So we would have debited bank with the amount received of 45,600 Rand. Now they only want current liabilities and current assets. Let's put the 45,600 there. And we would have had income received in advance because we haven't performed under the contract as yet. And that would be part of trade and other creditors. And the amount that we would have received would have been 40,000 VAT exclusive. And we would have credited our VAT control account. There's a credit balance, so it would have added to that balance 5,600 Rand as a result of that income received in advance. Now we have, so income received in advance, 40,000 and VAT 5,600. Okay. It's a perpetual inventory system, but we haven't performed under this contract as yet, so therefore there's no impact on our inventory figure. Cracks Limited purchased and paid for cosmetics with an invoice value of 27,360. They purchased and they paid when 27,360. Delivery took place immediately on the 28th of February. Now, these transactions have not yet been recorded. So that means the inventory count was performed on 28 February 2016. No movements other than those mentioned in note 1.4, this one here, took place after the count. So that means that we have to record here the sales transaction. They ordered, they paid, and delivery took place immediately. So that's a cash sale. So what would we have done? We would have debited our bank with a full amount received, the 27,360. 27,360. We would have credited sales. Now this is cash sales with a VAT exclusive amount of 24,000, and we would have credited our VAT control account with a VAT portion which equals an amount of 3,360. So bank, we would have debited 27,360. Sales for the cash sales portion, VAT exclusive amount of 24,000, and then that would have been VAT output here as well of 3,360. Good. It's a perpetual inventory system, so therefore we also have to go and adjusted our cost of sales. So cost of sales we would have debited with what amount? With 24,000 multiplied by our profit formula, which we have here, 100 divided by 125. And that gives us cost of sales of 19,200, and we would have credited our inventory with that 19,200. So let's do that. Cost of sales, it's 19,200, and then our inventory figure, goods that we've sold, 19,200. Good. Also, whilst we're busy with one, I'm going to do one in its entire format, and then we're going to go back to the sales story. The inventory count was performed on 28 February. No movements took place except those transactions, and then with a stock count, there were goods in transit between the Cape Town warehouse and the Johannesburg warehouse, and the amount of that goods in transit was 55,000 Rand. So guys, if these goods were actually put on the truck is somewhere in between Cape Town and Johannesburg. They performed a physical stock count. The truck couldn't have been counted because it was neither in Cape Town nor was it in Johannesburg. So that 55,000 Rand must always also have been included in our physical count value there. So that value was not the amount of 168,700, but was 168,700 plus the 55,000 for the stock in transit. Now let's go to number 4, because I want really to go back to sales and debtors. The allowance for credit losses as reflected on the trial balance represented an amount for outstanding debt from Mediloss. Now let's have a look. Where's that? We have here allowance for credit losses at the beginning of the year 4690. And they say that 4690 was for a debtor called Mediloss. And they said, we experienced serious cash flow problems in the past year end. After consultation with the debt collectors, it was decided to write off their debt as they are in the process of liquidation and to make an allowance for credit losses again at the end of the year at 5% of our outstanding debtors. Right, so let's handle the 4690 first. If that was the allowance for credit losses, what would have been the outstanding debt? It would have been that amount, 4690, multiplied by 1.14. Why? Because when we create an allowance for credit losses, we take the outstanding debtors, we remove the VAT, and that is our allowance account. So if you want to work backwards from the allowance to the outstanding debt, I have to add the VAT back again, and that means that the total outstanding debt was 5347, and that would have been the credit losses that we're going to write off. So we would have debited credit losses with a VAT exclusive amount. In this case, we would have actually used the allowance account, because that allowance account was actually created specifically for the purpose of writing off the Mediloss debt. So if it's a specific allowance that we've created, we're going to utilize the allowance. We would have debited our VAT, the VAT amount included. And the VAT amount included was 4690 times 14%, which gives us 657. And we would have credited our debtors with the amount that we're going to write off, 5347. So our allowance for credit losses of 4690 would have been removed out of the books. There's 4690. We would have added here, this is where's our VAT? It's a credit balance there of VAT. The 657, which is VAT input, which is going to reduce the VAT control account. Guys, I accidentally put the 3360 against bank overdraft a little while ago instead of against the VAT control account. I just rectified that. Great stuff. Now we can go ahead and we can go and make let the discounts allowed account disappear. We can update our sales, we can update our cost of sales, we can update our allowance for settlement discount. So let's go back to this first question here, or the first additional point of the information. They say our total sales for the year was 8.7 million rand. Of that sales, 500,000 was cash sales, so credit sales was 8.2 million. Of the 8.2 million, 75% of them has actually qualified for a settlement discount. So let's look at this one. We had total sales of 8.7 million rand. Cash sales was 500,000 rand, and then eventually that note 1.4.2, we have also had additional cash sales of 24,000 rand. If our total sales in the trial balance was 8.7 million, 500,000 was cash sales, it means that our credit sales was 8.2 million. 25% of the 8.2 million did not qualify for settlement discount, but 75% of the 8.2 million qualified for settlement discount. That gives us 6,150,000. Now, what is credit sales? That's all the sales made on credit during the current financial year. Some of it has already been paid by the debtors, but at year end, there is some of that sales that's still outstanding. It does, however, not matter for the purposes of sales, because for the purposes of sales, what do we account? We debit the debtors with a full invoice amount. we credit sales with the VAT exclusive amount multiplied by 98%. Remember, the settlement discount that they're entitled on is 2%. So 98% would have gone to the sales account. 2% would have gone against the allowance for settlement discount account. And then VAT would have been the VAT on the invoice. Now, the debtors was correct. Sales was not split. So the total VAT exclusive amount, those two together, was actually being posted against sales. That we know is not right, because we should only have taken 98% of all those amounts to the sales account and 2% to the settlement discount account. The question tells you here that all debtors who expected to make use of the discount as of 28 February 2015, the beginning of the year, as well as those during the financial year, indeed paid in time to utilize the discount. So that means that that full amount of 123,000 was actually either utilized if they've already settled the account, or it should have been posted against the allowance for settlement discount account. So if we go to the T accounts, what happened during the year? We said that discounts allowed was debited with all the discounts of all the debtors who paid in time during the year to make use of the settlement discount, 132,417. We said, but that's not altogether correct, because we have to update 123,000 Rand of that should have been posted against our sales. And that was purely based on the total credit sales invoices issued during the year and those debtors who is actually able to utilize the settlement discount. So if we take out the 123,000 Rand there, I have posted that against our sales. So our sales amount here would have been decreased with an amount of 123,000 Rand. What we have done up till now is not to decrease it, but to show the full amount there as credit sales. Guys, I also did not add the 24,000 here, which was the cash sales. This 24,000, which was the second transaction that we've done here, at cash sales of 24,000. So there's the VAT of 3360, which I've rectified a little bit earlier. I have posted the 19,200 and I have posted the 27,360. There that is. Right, coming back to the 8.2 million, we said we're going to take out 123,000 and we're going to reduce our sales. We had an opening balance on the allowance for settlement discount account of 12,936. The question tells me that those debtors who were entitled on the discount actually paid in time to make use of the discount. Instead of cleaning out this account with the 12,936, what did the guy do? He posted everything to the discounts allowed account. So that is also included in the 132,417. But I have already reduced my sales of the previous year when I recorded that with the 12,936. So I cannot take the 12,936 to sales because it has already reduced sales in the previous year, because this relates to the 2015 year. But when the debtor actually paid during the year and was actually entitled and received the discount, that counter leg was not posted against the allowance account but against the discounts allowed account. So let's take then out, remember allowance for settlement discounts got a credit balance, so let's take out the 12,936 out of that account and post it against the 132,000, the actual amount of discount allowed during the year. So that means what effectively will stay behind in this account will only be the discounts allowed that relates to the current financial period. Of that amount, 123,000 was sales for the full year, but that in actual fact will be a little bit of an overstatement of the discounts allowed, because I could not have allowed discounts on my closing balance of my debtors as yet. Why not? Because I haven't paid as yet. So he only posted when cash was received. So we also have to rectify this account which will be the portion of the 123,000 which has not been received at year end. And what portion is that going to be? That is going to be our debtors. Now the question tells me also here that you can assume that all outstanding debtors as at 29 February 2016 qualified for a settlement discount. So if we're going to rectify and adjust our debtors account first, we can, if we have our closing balance of our outstanding debtors, we can determine what should our settlement discount allowance accounts balance be. Now our debtors account is going to be the 205,944 less the credit losses that we have written off. Now the credit losses that we've written off is here number 4. We have debited that credit losses account of 4690. We should have credited our trade debtors with a full outstanding amount, the 5347, which equals this adjustment entry here. Credit debtors 5347, and we would have debited 469, and VAT we would have debited with 657, and that VAT portion we did debit with 657. So our trade debtors at year end would have been the 205,944 less the total there of 5347, the credit losses written off, which will give us a closing balance of 200,597. Now, that is the invoice value as at year end of all outstanding debtors. So if we have the invoice value, how do we work from invoice value to settlement discount value? We take out the VAT, so it's a 205,997, take out the VAT, multiplied by the settlement discount percentage of 2%, and that will give us the closing balance that we need on our allowance for settlement discount account. So we need a 3519 there. If we're going to balance off the discount allowed account, remember that 3519 is now effectively actually included in the 123,000. So if we're going to close off the discount allowed account, you will see I need a debit there of 3519, which will be the 3519 of the 123,000, which has not actually been received in cash as yet, so it could not have been included in the 132,417. So therefore I will increase my discount, the actual amount received, with the amount that's still receivable at year end, the 3519. It will clean out this account, and I'm going to create my allowance for settlement discount, debit that account, and credit this account. Then this account is clean, it's out of my books, I do not have to worry about that. My allowance for settlement discount account is now correct, 3519. The only other thing that we have to do is to update our allowance for credit losses, and that should be 5% of outstanding debtors at year end. So going back to this here, we would say, okay, allowance for credit losses is going to be our closing balance of debtors, the 20597. Again, we're going to take out the VAT of 1.14. We're going to multiply that by 5%, and that gives us 8798. So the entry that we're going to pass in our books is we're going to debit credit losses, or credit losses adjustment account as you wish, with that amount that we've calculated there of that is 8798, and we're going to then, we've taken out that thing, so that will increase then 8798, and then we're only done with the debtors. Right, the loan from Babson Bank was obtained on 1 September 2014, a long time ago, at an interest rate of 11% per annum. Interest is payable annually in arrears at 1 March of each year. So only once a year we're going to make an interest payment. At installments, repayment of capital capital takes place on a quarterly basis starting on 1 December 2014 at installments of 50,000 Rand each. What is that installment? Only capital, because that is what they're referring to. The 50,000 is only capital. So please don't try to break down the 50,000 in a capital component and the interest component with the amortization table. The interest rate changed to 12% on 1 December and to 13% on 1 January 2016. Interest was correctly calculated by the bookkeeper as 27,250. Now I gave you all that information and then I give you the answer. The only reason why I gave you the answer is because I realized you're not going to get finished with this question. So I decided, well, let me give you the answer. So please do not try to prove me wrong. I tell you here, it has been correctly calculated by 27,250, but was not yet been recorded in the accounting records for the year ended 29 February 2016. When is interest payable? On 1 March of each year. So that means there was accrued interest at the end of the year. I want to show you though how that interest calculation is being done, because it's important that you should know exactly how to do the interest calculation. You will have to determine, and it's best to work backwards. At the end of the year, the outstanding balance was 150,000. So starting there and working backwards, you say, well, at the end of the year, I had 150,000. Now, two things happened during the year. One thing is I have repaid each and every time 50,000 Rand on a quarterly basis. But something else has also happened. They tell me that the interest rate has changed. The interest rate was to 12% on 1 December, so it was 12%, but on the 1st of January this year, it changed to 13%. So whenever I do this interest calculation, each time that something happens, I have to stop and make sure that I'm going to record that correctly. So the 1st of January, something has happened. The interest rate has changed. What was the outstanding loan amount as at 1 January? Up to the end of the year, it was 150,000. So the interest payment from the 1st of Jan to the end of February was 150,000 times 13% for 12 months, which gave us 3250. Quarterly payments. So the 1st of December would have been the last quarterly payment in the current year. So their outstanding amount would also have been 150,000, but only 12% interest rate was applicable for 1 month. And then you will say, okay, well, the previous quarter will then be from 1 September to 1 December, and there the outstanding balance would have been 200,000, 150 plus 50, times 12% for 3 months, which will give us 6,000 Rand. And then the previous quarter would have been from 1 June to 1 September. And then obviously the outstanding balance would have been 50,000 Rand more. 250,000 because we repay 50,000 each time, times 12% for 3 months. And then the first quarter of the current financial year, the 1st of March to the 1st of June, the outstanding balance would again be 50,000 Rand more, 300,000 times 12% for 3 months. And that will give us a total of 9,000 Rand. So obviously coming back to our trial balance, we would have had an interest expense. And the interest expense would have been for 27,750, the amount that they gave us. And we would have had also accrued interest, which is now a credit. And that would have been for the same amount, 27,750. The warehouse in Johannesburg is rented from Space Age Limited as from 1 January 2015, so the beginning of the previous financial year. Monthly rental, according to the contract signed on this date, amounted to 17,100 Rand per month, inclusive of VAT. So if I'm going to work out the VAT exclusive amount, 17,100 divided by 1.14, it gives me 15,000 Rand per month. Payable in advance on the last day of the previous month with an annual escalation clause of 8%. When will the annual escalation clause kick in? It will kick in on the maturity date of the contract. When is the maturity date of the contract? It is the 1st of January. So on the 1st of January 2016, the rent would have increased with 8%. For how many months? Then for January and February, I would have paid the increased amount. The bookkeeper always records the check amount for rent paid as an expense when it is paid. The stupid bookkeeper then did also take the VAT on the rent paid to the rent expense account. Now, this is a little bit different way of asking the rent. There's no X's and Y's and all kinds of funny unknowns. Yeah, I know exactly what the amounts are. I know it used to be 15,000 Rand. And I know that my expense account for the year should be an amount of, let's say, 15,000 Rand for a number of 10 months for the year, from the 1st of March until the end of December. So that will give us a total expense of 150,000. Then there was an 8% escalation based on what? On 15,000 Rand. That gives us 16,200 Rand, and that was for 2 months if I'm only looking at the expense for the year. So I'm not looking at prepaid now. I want to know what was the expense for the year. So 16,200 was for March, or for January and February. That gives us 32,400, and in total then our expense for the year should have been 182,400. And that's what I want as the end result of my expense account. Now what happened in real life? In real life, what happened is that the guy has paid 9 installments. 15,000 times 9. Remember, because March, the beginning of the year's March 2015's rent was already paid in the February month of the previous year. And here on our trial balance, you actually saw that. Somewhere we had prepaid rent, 15,000 Rand, as at the 1st of March. So that 15,000 Rand has already been paid. So how many payments did he make at 15,000 Rand, the old rent? Not 10, but he actually only paid because March was already paid. So he only paid from the 1st of April to the end of the year 9 payments of that exclusive amount of 15,000. So he paid the 135,000 Rand, that exclusive. Then he paid 3 months because he already prepaid March 2016's rent, the next financial year's first month rent. And what is the amount there? 16,200. So he paid. Why am I so after the paid? Why am I bothered about the paid? Because guys, he took the amount that he paid as rent. Oh, check amount paid. He took that to the expense account. So if I want to rectify the expense account, I have to know exactly what am I working with here. So he paid January, February, March of the current year, 16,200 exclusive of that, 48,600. So the amount exclusive of that he paid during the year was 183,600. What did he take to our rent account? He took the VAT inclusive amount to the rent account. So the first thing that we want to do is to get rid of the prepaid rent. So if we go there, the 15,000 that we had as prepaid rent, we're going to take that out of the books. So there we're going to say minus 15,000. And what are we going to do with our rent? Here we're going to say plus 15,000, because that 15,000 really belongs to the current financial year. Then we're going to say, well, included in that rent expense is the VAT on the actual amount paid. What was the VAT on the actual amount paid? Well, guys, the actual amount paid was 183,600. So therefore, the VAT on that must be 14% of 183,600, which is 25,704. he should have claimed the VAT. So he should have debited VAT control with a 25,704 and he should have credited the rent expense with 25,704. This is a minus because it's a debit, it's an input, and he should have taken that out of his rent expense, 25,704. Right, then we have to take out also, and this 25,704 wasn't the actual amounts paid, so that also includes the prepaid amount of March, 3 months there. So now we want to take out the VAT exclusive prepaid amount because that is still lying in the rent expense account. We've already taken out the VAT on the prepayment, but what about the actual prepaid rent? And that 16,200 will be shown as prepaid rent at the end of the year, and we're going to credit our expense account with the other 16,200. Prepaid rent at the end of the year is going to be 16,200. A little bit different from what you're used to. No excess is required here, just plain common sense. Now, on the Juandre signed an advertising contract with Cosmetropol magazines. According to the contract, Juandre paid 41,040 for advertisements that run from 1 February 2016 up to 1 January 2017. So the first thing, 41,040 was the actual amount paid. We are only interested in the VAT exclusive amount, so that equals 36,000 Rand. How much is it now per month? That equals 3,000 Rand per month. How many months was prepaid? There's 11 months that's prepaid. So a total amount of 33,000 was prepaid advertising. So our advertising costs, expenses, is going to be reduced with 33,000. And I'm going to add that here with prepaid expenses. That would be our prepaid rent and advertising, 33,000 Rand. Furniture and equipment were purchased on 1 March 2014. No other furniture and equipment were bought or sold after the date. The depreciation charge as per the trial balance is correct at year end. Whoopie-doo. Stationery on hand on 29 February amounted to 3,270. So what am I going to do? I'm going to have an inventory account for consumables, and I'm going to credit the stationery year 3,270. So that other one will be part of my, not my trading inventory, but my stationery inventory of 3,270. The computer system classifies salaries as a main account, grouping together several sub-accounts such as salaries and wages paid, employee contribution to UIF, employee contribution to medical aid, and employee contribution to the pension fund. The salary run for February was completed, and on 28 February 2016. According to the salary register, net salaries amounted to 164,000 Rand. Deductions from the employees amounted to 77,600 Rand. So the net was 164,000. The deductions from employees was 77,600. And the employer contributions amounted to 23,180. So the total salary and salary-related expenses would have been, that equals 24,160 plus the 23,180, in total 264,780. Our expenses would have been updated with that. With what would our creditors have been updated? Well, we would have had creditors for deductions. And that would be the deductions which is made by the employee, and that was 77,600 plus the employer of 23,180. So under our trade and other payables, we would have had a total of 100,780. So if we're going to add the expense plus 264,780 with salaries, and we would have had here creditors for salary, creditors for deductions, a total of 100,780. And then eventually we're done with the question. So let's quickly check back to what the answer looks like. Sales. Now guys, sales was the initial amount that they gave us of 8.7 million. The cash sales in 1 point something was 24,000, less 123,000 discounts that we took out, and that gave us then the final sales figure of 8,601,000. Cost of sales, that was the 4,980,000 plus the 19,200 in 1 point something. It was the additional sales transaction that took place. That gives us then gross profit of 3,601,800. Advertising expenses after we took out the prepaid 33,000. Salaries is after we've done our last adjustment, which is in total then 264,780 plus the 938,250. Our rent, if we can just go back to our rent expense for the year, which we have calculated. Let me just find the rent. What happened to our rent? Yes, our rent. Our expense for the year, 182,400, which we have calculated already. Our stationery, we have deducted our closing inventory, and then our selling and distribution, depreciation, credit losses, that was our credit losses adjustment that we've passed of 8,798. And then discounts allowed. You don't have to show that. This is just to show you that it is never in our income statement. It actually came to zero. Then our interest for the year was the amount that they gave us of 27,250. So our profit for the year, 1609,232. They do not require the accounting policy note, but they do require that we disclose and prepare the notes on current assets and current liabilities. So let's go to the notes for current assets. Inventory, we had our trading goods at the end of the year was the amount that we had initially, the 168,700 less the 19,200 plus the 55,000. I think that 3270 was an incorrect entry that I've made there. The 3270 was the stationary inventory that we had at the end of the year. So my trading inventory would have been 204,500 just with those two adjustment entries, and then 3270 is my consumable stock at the end of the year. Total inventory 207,770. Juandre Pty Limited, Statement of Financial Position as at 29 February 2016. Assets under current assets. Remember we have a note there. You have to refer to that note. And then under note inventory, note number 2, the total of the note 207,770. Trade receivables, trade and other receivables. Trade debtors would have been the amount after we've posted our credit losses that we have deducted, the 5347, and that would have given us a total of 200,597. Our allowance for settlement discount was 3519. Our allowance for credit losses was 8798. There's a 200,597. So that then gives us at the end of the day a total of net trade debtors of 188,200. Our prepaid expenses, that was those two that we've added together, the rent of 16,200 and the advertising expenses of 33,000, which gives us in total 49,200, gives us a total there of 237,480, as disclosed on the face, trade and other receivables 237,480. Our current liabilities that we have to show, the first one is the short-term portion of the long-term loan. Remember that we had spoken about this whole story of the loan from Babsa Bank. We said that, well, in the next financial year, we're going to repay 15,000 Rand on a quarterly basis. But if you can remember correctly, the outstanding balance was only 150,000. So therefore, the full there's only 3 payments left. which will all happen in the next financial year. So the short-term portion of the long-term loan would have been the full 150,000. Remember that that note, where we're going to disclose that, is actually a non-current liability, where the note will appear. So it's not necessary here in this question, because I only require the notes on current liabilities. So it would only have shown the line item. And then trade and other payables. Well, trade and other payables, we would have shown here. Trade creditors would have been the 89,750. There's no adjustment entries against that. Our creditors for salary deductions, that would be that very last one that we've done. That would have been the 100,780. Our VAT control, well, there was a couple of adjustment entries that we've passed against our VAT control account, and that gives us then a net of 25,099. Income received in advance. Now, guys, that was that 1.4.1 that we've also inserted here at the bottom of the page, the 40,000 that we had there. Accrued expenses, that would have been the interest of 27,250. In total, 282,879, 282,879. Our bank overdraft, there was quite a number of adjustment entries there. The 23,980 was the opening balance. 164,000 was the net salaries. The 27,360, the 45,600 and 21,500. There's the total breakup of the amount of our overdrawn bank account, which gives us the amount of 136,520 at the end of the day.